Lights, camera, action.
I see you looking at my PIC. I know. 그게 땡겨 좀 더 땡겨봐봐 기동 차지. Zoom in, zoom out, okay. Zoom in, zoom out, okay. Zoom in, zoom out, okay. Baby 확하게 확대 확실하게.
Assalamualaikum warahmatullahi wabarakatuh. Today we want to present accounting for Islamic finance. Accounting based on interpretation and classification of data. The main distinction between Islamic and conventional accounting is how information is shared. Accounting in Islam provides all relevant information to the prospect, whereas conventional accounting only provides selected information. Type of accounting which sets its goal and perform all of its operation to achieve those goals ethically and objectively within the limits and boundaries of Islamic Sharia is known as Islamic accounting. Accounting system which identifies, measures, records, analyzes the financial aspects of an entity on the basis of Islamic Sharia is termed Islamic accounting. Islamic accounting is such accounting process which provides necessary financial and non-financial information to the stakeholders of an entity, which will ensure that entity is continuously operating within the bounds of the Islamic Sharia.
The background of the bank. The M-Bank Group was founded in 1976 as Arab Malaysian Merchant Bank Berhad until June 2002. M-Bank Group vision is we take pride in helping you build your future with us. M-Bank emphasizes relationship to help clients as advisors and long-term partners. P2E stands for principal, proactive, appreciative, connected, and evolving. M-Bank Group has helped Malaysia's economy for 40 years. They have over 3 million customers and 9,000 employees. In 1988, the group was listed on the primary market of Bursa Malaysia. It has a market capitalization of about 9 billion and asset of 170 billion ringgit as of 31st March 2021. Furthermore, M-Bank implemented FSA 2013 regulation. The Malaysian Financial Services Act 2013 regulates and supervises financial institutions, payment system, and other relevant entities to promote financial stability. It also oversees the money market and foreign exchange market.
Affin Bank started operation on 2001 after the merge between Perwira Affin Bank Berhad and BSN Commercial Berhad. To date, the bank maintains 82 branches in Malaysia. The company is a wholly owned subsidiary of Affin Holdings Berhad, listed on Bursa Malaysia. Moreover, the bank's Islamic banking division was established and began operations as a standalone full-fledged Islamic bank on 2006. Their tagline of "Banking without barriers" signifies the removal of boundaries within the bank's processes and its attitude in servicing its customers. Affin Islamic Bank uses the AISYAH 2013 Act to ensure that they can conduct financial intermediation functions in a Sharia-compliant manner that requires SIC of PNM to develop Sharia standards that implicate fundamentals requirement of the Sharia contracts to be used in the product development.
RAZAK Bank attempt to meet the needs of their Muslim client by offering Sharia compliance and Sharia-based code. RAZAK Bank is the first and the largest Islamic bank in the world, as well as one of Saudi Arabia's most advanced institutions. The bank is founded on the Islamic finance core principle, which are derived from the Al-Quran, as well as Islamic morality and ethics. RAZAK Bank is reputed to be the leader in Sharia compliant banking, and it also play a major role in bridging the gap between modern bank requirement and the core value of Islamic law, instituting industry and development standard to follow suit with over 60 years of banking and commercial experience. AIOF accounting standard have also been used in Saudi Arabia. AIOF and the role it plays globally. It's 98 standard in areas of accounting, auditing, governance, ethics, and Sharia, and the development of process. The relationship between AIOF standards are relevant international standard. Its positive impact on Islamic finance industry worldwide, and the growing interest in its standard, including mandatory adoption of AIOF standard. In addition, the workshop cover the key Islamic finance product and their development methodology, as well as management of pertaining risk. The workshop also shed light on the latest development and global best practice with respect to governance, and finally, explore the potential of Islamic financial development in the kingdom.
This condensed interim financial statement follow MFRS 13 for interim financial reporting and IAS 34 interim financial reporting. Some of the policy accounting are MFRS Conceptual Framework Reference Amendment, Business Definition, which is an amendment to MFRS 3, Material Definition Amendment to MFRS 101 and MFRS 108, Exemption from MFRS 3, Amendment from MFRS 4. The compact and audited interim financial statements for the period under review were prepared using historical costs, except for the asset and liabilities, which are stated at fair value. The interim financial statements were prepared using MASP's MFRS 134 interim financial reporting, Chapter 9 of Bursa Malaysia Securities Berhad's listing requirement, and BNM's policy document on financial reporting. The group's combined financial statement were prepared using international financial reporting standards as endorsed by the Kingdom of Saudi Arabia, standards and pronouncement issued by the Saudi Organization for Chartered and Professional Accountants, the Banking Control Law, the Kingdom Saudi Arabia's regulation and for companies, and the bank's bylaws. The consolidated financial statement used cost model except for derivative financial instruments and investments that are calculated at fair value. These consolidated financial statements are rounded to the nearest thousands Saudi Arabian riyals. IFRS, KSA and other SOCPA standards and pronouncement require the use of significant accounting estimates and assumptions to prepare consolidated financial statements.
Continue with the Sharia compliant alternative to conventional financial instrument of bank. There are plenty of Sharia compliant alternatives that can be applied to Muslim consumer. Every Islamic bank offered every AISYAH account that used to contract WADIHAH, whereby the bank guarantee the safekeeping of the goods or funds and will return them to the depositor by the bank procedures. Every Islamic bank offers every Islamic term deposit which implements MURABAHAH as the underlying contract where the bank identifies and uses a specific asset as the underlying asset or for the sale and purchase transaction between the bank and the customer. Property financing is for financing the purchase of a residential property. We found three products with different underlying contract in the two Islamic banks that we are choose, which are Afin Tawarruk Financing practices by Bithaman Ajil, BBA. The second product is Araji Home Financing which implements Musyarakah Mutanakisah. And the last product is Afin Home Invest which uses the contract of Tawarruk, where a buyer purchases an asset from a seller on deferred payment and then resell the asset to a third party for cash at a lower price than the deferred price. The last conventional product is a letter of credit, also known as a documentary credit, which is a payment mechanism used in international trade. The Sharia compliant alternative for this product is the letter of credit which uses two underlying contracts, which are Wakalah and Murabaha. For Wakalah LC, the bank will act as your company's agent by issuing a letter of credit to third party, promising to pay the specific amount upon the third party's fulfillment of the letter of credit state conditions at a future date. For Murabaha LCI, it is issued on an applicant behalf importer. The bank issuing the letter of credit agrees to pay the specific amount by the latest term. Murabaha LCI is frequently used as short-term transaction, such as issuing importer letter of credit.
Okay, I will explain for the different component in statement of financial position. So the component in SOFI that Afin Bank has but the other two banks did not have are derivative financial asset and the amount due from joint venture. Meanwhile, in Rajihi Bank of Saudi Arabia, the item in the asset component that are different from other two banks, which is Afin Bank and M Bank, investment, financing, investment properties, due from bank and other financial institution, and lastly is property and equipment.
Liabilities for MBank Berhad that has investment account of customers, securities suit under purchase agreements, resources obligation on loans and financing sold to Cagar Mas Berhad, derivative financial liabilities, term funding, debt capital, deferred tax liabilities, insurance contract liabilities, and other insurance payable as items in the component of liabilities that is different than the other two banks. Items of liabilities in Affin Islamic Bank include investment accounts due to designated financial institutions, resources obligation of financing sold to Cagar Mas Berhad, derivative financial liabilities, amount due to holding company, provision of taxation, lease liabilities, and subordinated terms financing and medium-term notes. A tax provision is the estimated amount of income tax that a company must pay to the Lembaga Hasil Dalam Negeri Malaysia, which is LHDN. For RAZAK banks, only has two items in the component of liabilities which are due to the bank and other financial institutions and customers' deposit. If the deposit is for a long-term project that will not be resolved within 1 year, it could instead be classified as a long-term liability.
Equity represents the amount belonging to the shareholders of the company. This indicates the amount invested by the company shareholders and the amount the company owes to them. In M-Bank Berhad, these components are different from the other two banks. The components are treasury shares, equity attributable to equity holders of the company, and non-controlling interest. However, in Affin Islamic Bank and M-Bank Berhad, they have deposit and placement with banks and other financial institutions, but in Al-Rajahi Bank, they do not have them. Lastly, Al-Rajahi Bank has share capital, statutory reserve, and other reserve as in the component of equity. The differences of component in statement of corporation income in Affin Islamic Bank has, but the other two did not have, are profit after zakat and taxation, net fair value change in financial investment at FVOCI, net credit impairment loss change in financial investment at FVOCI, the instrument, net gain on financial investment measured at FVOCI classified to profit or loss on disposal, the instrument, exchange differences on translation or forex operation, deferred tax on financial investment at FVOCI, the share of other comprehensive loss of a joint venture, the share of other comprehensive loss or income of association, net fair value change in financial investment designated at FVOCI, equity instrument, deferred tax on financial investment at FVOCI, equity holders of the bank and non-controlling interest. However, in M-Bank Berhad have loss of profit, remeasurement of defined benefit liability, net unrealized gain on changes in fair value, tax effect relating to components of other comprehensive income, defined benefit liability, financial investment at FVOCI, currency translation, loss or gain on forex operation, gain or loss arising during financial year, reclassification adjustment for gain included in profit or loss, amortization of fair value changes for terminated hedges, financial investment at FVOCI, net unrealized gain on changes in fair value, net gain reclassified to profit or loss, changes in expected credit losses, forex exchange differences, tax effect relating to component of other comprehensive income or loss, cash flow hedge, and share of reserve movement in equity accounted joint venture. Meanwhile, the difference of component in the statement of comprehensive income at Al-Rajahi Bank are revenue, income derived from the investment of depositors' fund, income derived from the investment of shareholders' fund, write-back or allowance for credit losses on financial assets, total distributable income, income attributable to depositors, total net income, personal expenses, other overhead and expenditures, profit before zakat and taxation, zakat, taxation, net loss or profit for the financial period, financial investment held at fair value through other comprehensive income, net annualized loss or gain on changes in fair value, net of tax, total comprehensive loss or gain income for the financial period, and total comprehensive loss or gain income for financial period attributable to an equity holder.
In conclusion, Islamic finance follow the Sharia, so certain restrictions will apply. Firstly, Islamic financial institutions cannot finance businesses that engage in Sharia-prohibited activities. Examples include selling alcohol, pork, and pornographic content. Secondly, IFIs can charge interest on loans. Instead, need must be met by providing assets or distributing profits and losses freely. Thirdly, profit can be shared under a profit and loss enrichment in the Islamic financial system. Each participant's capital contribution or ownership determines loss allocation. The information on the statement of financial position can be used to do several financial analyses, such as comparing debt to equity or comparing current assets to current liabilities. These analyses are often shown on a trend line, which shows how the reporting entities' finance have changed over time. Also, the statement is more valuable when it is made with the basic accounting principle that accounting frameworks require. A comprehensive income statement is a financial report showing ordinary net income and other comprehensive income. The net income is what comes out of making an income statement. On the other hand, other comprehensive income includes all unrealized profits and losses on assets not included in the income statement. It is a more comprehensive agreement that is often used by multinational companies with investment around the world.
That's all from us. Thank you.